everybody, and welcome back to the channel. Excited to be back with a market update for today. I know it's been a little while, but I've been doing some traveling, and so back to making some videos. I think it is a pretty exciting time in the market. Unfortunately, not exciting in the respect of a massive bull market, which, you know, I would like to see, and I think a lot of other people would like to see because it's a little bit more fun and, easier to make some money. But anyways, we'll kind of jump into the update here. So to start with, we're taking a look at the S&P 500 index, kind of the main U.S. stock market index. There's also the NASDAQ for tech stocks, and then the Dow Jones Industrial Average, which is more for like industrial companies. But the S&P 500 index covers most of the major U.S. companies, and is not exclusively just tech, although it does include like Microsoft and a lot of those tech companies in the index. So as you can see, we have the chart, the most recent chart. It's been an interesting couple days. We had a pretty big rally the past 2 days. Okay, I'm looking at the mini futures here. Okay, all right, here we go. But either way, yeah. So we had an interesting rally kind of 2 days ago, quite a substantial rally. And then yesterday, we kind of more or less traded within a narrow range. And see here, S&P index was net down like 0.2%, but not that much. And it's interesting if you kind of take a look at this chart. We're kind of in this. We're kind of now in this trading range, which really, if you could even extend it, we kind of tested it there, and we could even probably zoom out. I don't know. Yeah, it looks. If you extend it all the way back, yeah, it looks like we also kind of saw some volume in that range in the bull market. I think that was back in early 2021. So you can see there's been kind of a lot of trading activity within this range. So I think it's possible that, maybe this 3,800 could act as some type of a support level, and, we could get rejected and crash down, or we could break above. Who really knows? But either way, that's kind of what's going on as we, rallied out the bottom. I think there was some positive news, and like some job openings were slowing down, and some indicators inflation may be coming down. So I think that was kind of one of the narratives for this. But either way, interesting. Yep. So yeah, that's kind of the market. In general, I would say personally, again, none of this is financial advice, but personally, I remain obviously quite bearish due to the macro conditions, M2 money supply in the US, as in most other countries. Europe is a bit of an exception, but especially most developed countries, has been falling. So basically the liquidity flowing into the market is falling. So I think it's unlikely that stock market will continue to go up as the Fed is raising rates and they're selling out their balance sheet, and a lot of other developed economies are doing the same in an effort to kind of combat inflation. So it's very likely, I would say, that there's a continued deterioration in U.S. markets, especially because, like, if you look at a great, most recent example of like 2018 and 2019, the Fed was raising rates, I believe, in 2018, and then they kind of paused at the end of 18, early 2019, because the markets were crashing. And then they paused and then eventually lowered rates in 2019. Markets went up again. Then they lowered again when, the virus event happened, and, injected a bunch of money, and markets blasted off. So, in recent history, when they've been raising rates, it has crashed the market. And what's pretty crazy is, like, in the U.S., they raised rates to only, like, I think it was 2.5% was the Fed funds rate in 2018, 2019, and that crashed the market. And so right now we're at 3.25% Fed funds rate, and expected to go to like 4.75, I think, is the target on the Fed dot plot. So I mean, just kind of using common sense, like we have way more debt because the money printed through COVID, and if 2.5% interest rates crash the market, and plus now they're selling off balance sheet assets, how is, 5 going to be sustainable? You know, like there's no way asset prices are probably going to stay elevated or stay at the current levels with that kind of financial restriction. Because, in my opinion, basically, truly innovation based growth is only like 10% of an economy's performance these days. Like 90% of it is Fed policy. So, pretty huge headwind. So, yeah, that's kind of what's going on, macroeconomics wise. Now let's jump into, actually, you know what? Let's cover crypto last, kind of jump into just a couple of the themes. So, again, like I was talking about the US Federal Reserve, they've came out with, several statements. If you listen to they kind of have monthly meetings, and they release minutes, and then the Fed chairman Jerome Powell gives a statement. I think those are pretty probably one of the most useful things you can do to get a gauge on market activity and market prospects going forward. So Jerome Powell at the U.S. Federal Reserve has been really adamant that they're going to keep raising rates, and I think one of his goals that he was saying is they want the Fed funds rate to be above the CPI inflation rate by 1% for a period of time. Considering the Fed funds rate now is 3.25%, and the US CPI I think is like 8.3, 8.6. I mean, there's a ways to go because there's like they need to close like a 6% gap and then hold that for a while. So, inflation doesn't move extremely rapidly within a month or two, unless there's like a huge blow up like Lehman Brothers, like some huge entity collapses and then the market crashes. So, um, yeah, so in one of the scenarios that Jerome Powell keeps saying that they want to avoid is the inflation episode of like the late 70s. So all these, analysts at the Federal Reserve are kind of looking at the model of the 70s because that was the most recent episode in US history where we had very high inflation. And the scenario that they're trying to avoid is, as you can see on this chart, so in about, let's see here, about 75 inflation, 74 to 75 inflation shot up, reached, I don't know, 11.5%. And then the Fed raised rates to combat this, and then inflation dropped pretty rapidly back down to about 6%. So then the Fed cut rates, but then inflation just shot right back up to like almost 14%. And then the Fed had to like aggressively raise rates even higher and hold them there for a while. And then eventually that, in around 1980, started to finally kill the inflation. Went down to 4 and then kind of hovered around, went back almost to 6, and then finally, through the 90s, fell down to about 2% in 2000. So the point of this chart is, you know, inflation can increase and decrease in waves. And that's, when there's a lot of printed money sitting around, and there's also supply shocks, has been happening with the Ukraine conflict and things like that. Um, Inflation can shoot up at times due to different circumstances and then come down, shoot up, come down, and shoot up. So, um, just important to be really patient with the markets because, you know, one of the concerns right now is that, like, at least I can speak for the US market, if inflation comes down, people might be all these people are out, oh, there's $2 trillion sitting on the sidelines from all these funds that are sitting in cash right now. But, if inflation might come down and then all these people start buying up stocks and assets again. But the problem is, what if that shoots up? And then, then people are going to get super wrecked in the trade. And, this isn't just necessarily my idea. I think some of the former guys from Bridgewater have been, also reiterating that like likely if they cut rates right now, it'll just create a demand frenzy again and push inflation back up. So likely to be in it for the long haul unless there's some type of market blow up. So speaking of market blow up, wanted to cover some of the current events that you guys may have seen in the news. There's been a story floating around over the past, I guess, month about these like $1.5 trillion in European energy margin calls. So I would say that's a pretty substantial risk for the global economy right now. With natural gas being cut off, supplies to Europe, and then electricity prices shooting up, like in Germany, about 10x. And then there's, all these margin calls for banks and different funds. There's been rumors, I think, about Credit Suisse going bankrupt. Um, and yeah, and then there's also been rumors about pension funds in Europe going insolvent and having to be bailed out. So I think there's a lot of risk in Europe, especially because Europe already, they do have a very large amount of debt to GDP, even more so than the US. And then I think the growth is slower. So, and if there was a large collapse event, kind of like a Lehman Brothers event in Europe, that could definitely make its way into the US. So something to keep an eye on. And one other interesting point too, I heard some of the folks at Bridgewater making was, you know, one of the problems and the risks right now is that the US is not really priced for any type of significant market decline. And, whereas, UK, Europe, and Japan are. So the point is, if there was some type of large developed economic collapse or some event like that, which could happen because there's a lot of risk and a lot of debt. People are trying to raise rates on the debt. I mean, that does put a lot of pressure on the economy, so it does create kind of a riskier situation. Um, you know, the US isn't priced for a significant decline like that, whereas, again, UK, Europe, and Japan are. So basically, the US could have further to fall than those other economies if there was some banks failed in the UK and then that migrated, affected some banks in the US, etc. So something to keep an eye on. Then another interesting kind of trend that's been going on lately is currency changes. Um, I've been hearing a lot of analysts talk about how like, oh, I haven't seen currency moves like this in 30 years. So it's pretty substantial. Basically, a lot of this money printing a lot of the money printing and then the inflation now constraining the money printing is basically being outlet into the currency value because governments are trying to like control the inflation for their citizens, um, but they're also trying to print money to like prevent companies and banks from collapsing. So essentially the outlet is then if there's a lot of manipulation and they just keep trying, these governments keep trying to sell more bonds to raise money, the currency value will crash and the bonds values will crash. So, you're seeing this in the UK, well, really in the UK, Europe, and Japan. So, yeah, as you can see, pretty interesting chart here. The DXY US dollar index hit pretty crazy peak of, I think it was like 115-ish, something like that. And, it has backed off down to about 110, but it will be interesting to see if that can continue to rally. I mean, obviously, so yeah, quite a substantial, move within history. We haven't really seen anything like that for quite a long time, since like 2002. So, but again, if there is some blows up in the U.S., I think that could definitely affect the DXY. So yeah, we'll go over to take a look at just some other a couple of currency pairs real quick. U.S. dollar to Japanese yen. You can see that this continues to trend. The yen continues to kind of devalue, although it has slowed a little bit because Japan's been attempting to defend its currency. But that will be interesting to keep an eye on. The pound, which was pretty, had some pretty crazy moves. It shot from like, what, 0.07 USD to pound sterling from 0.87 to, was this like 0.93 within just like 2 weeks. but now the UK also trying to defend their currency, so it's kind of came down. But the interesting thing is the UK started this like bond buying program, and I think it's supposed to end sometime in October. So, most people think that it probably won't, but it will be interesting to see what happens throughout this month. And then USD Euro, I mean, it looks pretty similar to the pound chart. So yeah, we'll make our way to cryptocurrencies. Okay, so pretty decent day. Cryptocurrencies kind of rallying a bit to the top of their range that they've been in for a while, between like 18,500 and $20,500. Bitcoin has been kind of hovering in this range. So cryptocurrencies kind of rallied to the top of their range. I mean, again, cryptocurrencies really continue to trade extremely correlated to the S&P 500 and the NASDAQ index. Um, the thing is, sometimes people will, there'll be a day where stocks go down and cryptocurrencies stay flat, or there'll be a day when cryptocurrencies go up and stocks stay flat. You know, just because cryptocurrencies and US stocks are correlated doesn't mean that they trade in tandem like every 15 minutes, like the move is exactly the same. But if you really look on a bit of a longer time frame, I mean, they trade extremely correlated. So it seems, if you're looking at the risk to reward, it seems very likely that US stocks could continue to deteriorate. And, it seems likely that cryptocurrency could be correlated and deteriorate with the stocks, because they really haven't shown signs of decorrelating. But, again, it's possible, especially as some of these currencies are showing these wild moves, kind of as an outlet of the money printing, that there is a decorrelation, and um, cryptocurrencies do break from stocks. But, if I were to bet on something, I'd say if it seems likely that there could be some type of capitulation event in developed economies, just again, due to all the debt and then raising rates on that debt, seems likely maybe that you could see Bitcoin and cryptocurrencies kind of exhibit like a 2020 crash, where I think it crashed down to like as low as $3,000 from, like $10,000. I think it'd be possible that you could see something like that, and then maybe if there was a decorrelation, it would happen afterwards, but, who knows? So, yeah, interesting. Keep your eye on. So, all right, we'll head over to Capu Crypto again, which is the website for this channel. I'm excited that the site is up and operational. Basically, what this site does is it has different cryptocurrency rankings and charts based on social media development and liquidity data. And basically 90% of the website is free, and these metrics, as far as I'm aware, don't exist on any other site. There is one other site that has social media metrics, but they basically just have aggregate metrics for different data points, whereas we have the specific data points like Reddit posts or Twitter followers, or etc. So yeah, I just wanted to kind of talk through some of this data. I think it might be interesting. So okay, so first of all, we have cryptocurrencies ranked by Kept Crypto Score, which is basically, it has social media and software development metrics, and this has 15 different data points. So it's like averaging out the rank of the cryptocurrency between all those different data points. And, so again, that could include things like Reddit posts, Twitter tweets, things like that. So you'll see here, Ethereum has the top score, and Bitcoin has followed closely behind. I think that's reflected, I think that's pretty accurate to what's going on in the markets, because obviously Ethereum has shown some considerable strength in this bear market. I mean, really done well by relative to its, I think peak at 4,500. I mean, still trading at like almost 1500. So really, what is that? That's like a 3x decline, which is funny that we say that's good, but if you compare it against coins like Solana, who have went down, I don't know what, 6, 7, 8x, something like that, 7x, um, pretty good. Even Bitcoin has went down like 3x. So, I mean, Ethereum's holding its value like almost just as well as Bitcoin. So, pretty impressive um, performance by Ethereum, and they just executed the merge. So, definitely looking strong. I think it's interesting that Solana is in the number three place. Again, when you're kind of aggregating all these social media and development metrics, you know, again, not investment advice, but to me, I do see Solana as being a bit undervalued because, when I look at these top cryptocurrencies, I see, BNB, Ripple, whatever, take out the stable coins, and then Cardano. You know, obviously I understand BNB, right? Because they're Binance's coin and you can use it to get like discounts on fees on their exchange. And then they have PancakeSwap, which is, has done pretty well and lists a lot of different cryptocurrencies. So I get that, but I mean, if you look at the tech of BNB, it's terrible, right? I mean, it's not like BNB is gonna see a lot of growth, you know, in the future because the technology is just pretty far behind Ethereum or, Solana, in my opinion. So even though I kind of get the valuation, it does seem like Solana could have a lot further to climb. And then Ripple, I mean, I definitely think Solana has more traction than Ripple. If you look at Cardano, I mean, also Solana, people are actually like selling a bunch of NFTs on Solana, and that's growing really rapidly. And, there's a lot of development. I mean, to my knowledge, I don't really know that there's any production activity on Cardano. And then, I mean, the other thing I think too sometimes is, or almost any, like Solana, they launched that project, what, like 2 years ago? And we're already doing like 3,000 transactions per second and have all this growth. I mean, Cardano has taken like 4 years or whatever, 5 years just to launch a production app. So it seems like Solana is executing like at a speed that's way faster than Cardano, like 10 times as fast as Cardano. So I just don't see how Cardano could surpass Solana in my eyes. So, I mean, honestly, if I look at Solana, I think it should be valued behind Ethereum. I don't think it justifies valuation before Ethereum, but I could see it in the number three place. And then, I mean, if you look at metrics, it is in the number three place. So, and it has quite a big gap over Cardano, which is in fourth place. So, anyways, that's kind of my opinion. And then another thing that I'd like to discuss. So, I get the criticisms of Solana. Again, people don't like the coin because it was backed by all these venture capitalists. And a lot of the coins on the Solana network, basically VCs got to buy a bunch at a cheap price and then they released them to the public and just dumped on people. And then retail people bought them, the price never went up. So it was kind of like a lot of investors screwing the average person with that chain. And I get some of the criticisms of the attitude of some of those people. Some of the people involved with Solana might not be as Ethereum might be a little that community might be a little bit more open to people. And then the other positive, I mean, there's many positives of Ethereum, right? But one of the positives is also Vitalik has a pretty great vision and he's trying to decentralize economic control, keeping it as a nonprofit and really trying to prevent some large central entity from controlling Ethereum and being able to kind of dominate economic power. I mean, that is a pretty good vision, right? Because I think you see with a lot of the central banking how, one organization holds control, it can easily get extremely corrupt, and then a lot of other people can get, screwed over by it, right? So you can definitely see the benefit of really trying to decentralize control, of Ethereum. So I see that, but then it's like hard because I look at Solana and I'm like, they have proof of stake. They can do thousands of transactions per second. Yes, the network goes down like, I don't know, once a month, something like that. But at the end of the day, I mean, they have a very fast network that works most of the time, and they're gaining experience on how to run a proof of stake network at a high speed. Sometimes to be honest, like my realistic criticism of Ethereum would be the technology is still years behind Solana. I mean, by the time they get sharding going and have speeds comparable on the network to Solana, I mean, that's probably what, 3 years away or something. So, that would be one criticism would be that Solana is gaining experience on how to, execute a proof of stake network at high transaction speeds and figuring out the problems associated with that and fixing those, whereas Ethereum is like 3 years behind. So, I could levy that as a criticism. I mean, then another criticism is honestly that I would, in a benefit of Solana, that I could say is like Sam Bankman-Fried, who, runs Alameda and is kind of backing Solana. I have to be honest, in my opinion, he is a pretty good politician. Like he knows how, obviously, I mean, he's like the richest man ever for his age, and he knows how to kind of broker partnerships within the US government regulatory departments and partnerships within banks and partnerships with NFL. Like he really knows how to handle the politics at a high level, which I mean, I think if you look throughout history, it's like if you look at John D. Rockefeller, who was basically the richest man in the US in the late 1800s, and he built the Standard Oil Empire, and had just this enormous business empire that was untouchable. A large reason for him achieving such high level success is that he was obviously brilliant, but then also an extremely good politician. And he knew how to build the right relationships and not, you know, upset certain people in order to keep his business going. And I think honestly, if I'm honest, one of the strengths I see about Solana is that they really have that political skill. At least some people that are supporting Solana have that political skill. And again, they maybe build a little bit more for users to a degree. So I could see that as a benefit. But I totally also see how, Solana being more centralized, it could repeat the same mistakes that cryptocurrency is trying to avoid. So I can see both criticisms, but either way, it's like Solana is having a lot of NFT traction. There are people building on it. I mean, I think we can at least agree it should be probably valued even more than BNB. So not even discounting that. I mean, it's like if you look at Cardano, XRP, and BNB, I mean, Solana is seeing a lot more activity on its chain, so I can just see it valued higher. But that's my opinion. So anyways, we'll kind of go over some of the other ranks here. Cardano at 4, which kind of makes sense, even though it's more distant. Dogecoin and Chainlink, interesting, has been seeing a lot of social traction. Near Protocol, interesting, being number 7. Near in terms of market cap is way down at 28, and it has been showing some decent strength kind of through this bear market when when there's bull days. A lot of times you'll see Near do pretty well. So that may be something to keep an eye on. I don't know that they really have had much traction, honestly, in terms of people developing on their protocol. But and then the other thing you have to keep in mind too is if there's another bull run, there may be new coins with new tech, right, that come up, kind of like Solana did in this bull market and outperform, the older coins. So, just want to be aware of all those different scenarios. But, Near has been somewhat interesting. Then BNB, Terra Luna Classic. This gas coin, which is kind of interesting, which I've been seeing has been doing pretty well. And honestly, I'm not too aware of, obviously, XRP, Algorand, Stefan. So, yeah, we'll take a look at, so that's kind of interesting. Also want to take a look at this graph, NFT tweets, or it's a ranking table. I think this is pretty interesting because basically it takes cryptocurrencies and ranks them by NFT related tweets. So you can see that Solana, 50,000, 57,000 tweets regarding NFTs, which is actually way more than Ethereum. So, again, I guess you could say like, hopefully these are not all bots, but I mean, if you look at Solana with the growth of like Magic Eden and NFT sales, I mean, they definitely are seeing a lot of NFT activity there. Um, then Ethereum second. Interesting that Elrond is third, which I'm not too, I heard some positive things about the last bull market, but not to where Polygon. Chronos, interesting. Cardano, and then Hedera and Tezos, which is pretty interesting, which was kind of around in the 2018 bull market. So, yeah, this can be interesting to kind of peruse through and look at which things may have um, tweets regarding. Let's go take a look at Reddit comments then, and then we'll kind of wrap this video up after this. But I thought this was a bit of an interesting graph. So we'll start with Bitcoin. This kind of shows the Reddit comments per day, and definitely have declined significantly. I think one thing that's interesting about some of these social metrics is they really concur with some of the on-chain metrics and kind of suggest that the real peak of the bull market was in May of 2021. And that, the November kind of rally that we saw was not really the peak of like new entrants into the market and things like that. So you could almost make an argument, even though it was double top, to the real top, especially if you discount for like growth over time, that maybe the real top was in May. Because it was, at an earlier point in time, so growth in the network was less. So going to that high of a price, it could have been a net value of more than the November peak. So, again, a lot of the social metrics kind of concur that May 2021 was a real peak. So we've really declined significantly. We've continued to decline with Reddit activity to levels now that are, kind of like mid 2017 or November 2017 levels. They're definitely still substantially above kind of like the 2018 bear market lows. They're still, 3, 4 times higher, but definitely seen a continued deterioration in interest and activity in Reddit comments with Bitcoin. Let's take a look at maybe just Solana and Ethereum. Okay, so Solana, I mean, wow, this is pretty crazy. If you look at this chart, from a peak of 431 comments to one as low as 9 just like a month ago. So definitely some substantial deterioration to levels before the price even took off in terms of Reddit comments. Let's take a look at just total tweets. Let's see if we can pull this chart up here. Okay. Yeah, so Bitcoin, so this is kind of interesting. I'm just looking at total tweets, has been really actually pretty stable over the past few months. We can take a look at, let's take a look at Ethereum. It's interesting. Ethereum, since June, has almost been growing in terms of tweets regarding it. And then let's take a look at Solana. Let's see here. Solana, slow deterioration, which kind of makes sense. Yeah, so I think we'll leave it at that for today, but hope everybody enjoyed the market update and excited to be back making videos again. So, all right, I hope everyone has a great rest of their day. Thanks.